Hello and a very warm welcome to all the viewers of 3.0 TV. I am Manoj Dara. The constant stop and start pattern for the financial markets in the recent months has made it difficult for allocators to deploy its capital in meaningful way of most asset classes. But for crypto in particular, the insolvencies and diverging events of 2022 have culminated in a confidence crunch that we believe could extend the down cycle for at least several more months in 2023 as well. So, on the contrary, a liquidity may also disrupt normal market operations in the short term, as many institution entities reckon with assets being locked up in FTX's bankruptcy proceedings. However, it is not all bad news. This environment has actually helped the cryptocurrencies pull back up from the speculative fever and paves the way for new innovations in the asset classes. So, to discuss the entire cryptocurrency market events in 2023 as well, we have invited three special guests. Let me introduce you to Varun Singhi, COO of Equirus Exchange India. Varun, welcome on 3.0 TV.
Well, glad to be here. Thanks for having me, Manoj.
My next guest is Mr. Samrat Kishore from Ethereum Alliance. Samrat, welcome on 3.0 TV.
Thank you, Manoj. It's always a pleasure to be here.
Thanks for joining from Singapore. And our next guest is Mr. Chandan Gupta. He's a trading analyst at Crypto Exchange and he is a mentor as well. Chandan, welcome on 3.0 TV and thanks for joining from Dubai.
Thank you. Thank you so much for giving me the invitation to have this conference.
All right. So, Samrat, your opening remarks, since we are seeing the market has actually recovered, but as we go back in 2022, first was the Terra Luna collapse and then the FTX implosion, and we have seen a broader market crack. Do you see this crack, getting extended in 2023 as well? To what extent?
Yeah, Manoj. So to begin with, I think we have very seasoned players in the crypto market, both Varuns and I think they will talk more about how the charts are looking. What I can tell you is how the sentiment is looking and how the companies are building now, being involved in various forums. So one is, as you said, that there were all-time lows that came. Of course, there was a lot of loss. There was a lot of loss. I was analyzing a report a few days back that there were, the best cryptocurrency had about 33% loss. So I think those were some tricky things that we saw. Pretty amazing was, in fact, I would clearly call the FTX one absolutely manufactured because of some people who got really greedy and lost track of things that they were doing.
Exactly.
So that's not a market phenomenon, right? I call it a black swan event. That just happened and took along a lot of other players as well. What we now see is a ripple effect which continues. I've seen that rippling over. I've seen that it's flipped over into 2023 as well. In my opinion, currently seeing that mostly stablecoins are having large transaction volumes and all the others, they just keep fluctuating in a big way. It just shows me that people are using it for transactions. There are payouts, there are a lot of salaries, there are a lot of transfers which go out in stablecoins, but no new investment is coming in. That's just my opinion. In 2023, that people are not putting in the risk capital. People have changed their way of looking at cryptocurrencies and investments. So that's something which I'm seeing. And of course, because the whole crypto market made all-time highs, that is why we're saying that 2022 made all-time lows as well. But from where we are coming in 10 years, I think we're still at a good spot. People who got in early.
Fantastic. And Chandan, what's your opening remarks? The important keyword which I've picked from what Samrat has said, or he has mentioned, is there are no new investments that are coming in. So, Chandan, my next question to you is, institutional investors have already scaled back their capital deployment in the riskier assets. What's your opening remarks as far as 2023 is concerned?
Well, as far as I see the market and how the institutional movements are happening, it's all completely looking clearly that institutional investors are playing very, very safe right now. Recently, since last 3 months, what we have been able to see in the charts technically, and as well from the fundamental analysis of the news and all the information that we are able to gather up, is that institutional investors are so quirky right now. As soon as they see a movement negative happening in one of their other investments, they will shift. So this means that institutional investors or institutions actually are very, very keen and observant, as well as they are very, very afraid as well. So calling this thing as they are afraid and they are quirky, it also suggests us that market is not at all stable. There is a big confusion in the market, and as well the market is a little dangerous to give a confirmed trend to any of the instruments here. Not even crypto, but of course, everywhere it's the same. So according to me, yeah, I mean, it's bad times, and it's going to happen for us for some time now.
Bad times are not going to last for long. That's what we have understood in our career as well. But Varun, what's your opening remarks? There are few keywords and dangerous words which Chandan has actually used. I would like to pass it on to you. Is the crypto market is not safe. People are afraid. Quirky movement, and market is not stable. What's your opening remarks?
Right. So I would actually pick a word which Samrat mentioned, right, which is very crucial, the manufactured crisis, right? Because when big things happen, big crises happen, I think we will have to dissect the crypto part, technology part, the greed part, right? So what you saw with FTX was a complete corporate governance failure, not the crypto technology or the crypto trading part, right?
The underlying technology is still strong.
Absolutely, absolutely. So this is where we will have to do the dissect, because now if you look, people are looking, the FTX implosion as a whole crypto downturn, right? And again, it is coupled with macro global events. So my take is that Chandan has very rightly mentioned that the institutional investors interest will evolve. I mean, they're very cautious at the moment. They're very quirky, and they will expect better quality right now, because the FTX contagion, the event which happened, right, the contagion effect, which will be spilled over. So what I believe is basically, this particular, whatever Terra Luna, FTX, and we will see some more collateral damage in the future, because we are in the process of consolidation, right? So the market has to be prepared, right? And this gives opportunity for creation of better products, right? And if you look at exchanges today, the one which are, more stable, they have taken this opportunity to build more robust products and keep that institutional interest evolving, right? But that is the key, right? Because institutional investors, right, they are the key. They want sophisticated tools. They want peace of mind. They want, everything which actually can give them benefits and the returns, right? So outlook is pretty stable at the moment, but it will only be until, I think you will touch base upon on regulations part. I don't want to go there, but yes, regulation will play a key role, on how this interest will evolve.
Environment is currently stable. That's the word coming in from Varun, and after almost 20-25% surge in Bitcoin price as well. Thank you, Varun. And my next question to Samrat is after witnessing a tumultuous 2022, the cryptocurrencies have begun 23 on an optimistic note. Let's not take it away from them. So what are the factors according to you that may have prompted the move, if you can highlight them?
So I see this as cyclical move, Manoj. I've seen that towards the end of every year there is always a lot of wipe off from the market. A lot of money goes out and prices come down. And the euphoric rally of 2022 or 2021, you can always remember large movements happened in January. So I'm comparing it to that, and if you compare the month on month, the same month of last year and the previous year, you would see that the increase is not as much as it was in the previous 2 years. So that would simply mean that it is cyclical and it is happening because of everybody's the planned events. But I would still not see. I personally still don't see that same level of enthusiasm in the market yet.
Exactly. But Chandan, do you agree with Samrat? So we are coming from a concern largely driven by FTX. Terra Luna is something which we have witnessed and we have seen through as well, and the larger bankruptcies. But FTX was a broad concern wherein we have seen roughly around $30 billion, as we say that it's been eroded from the market. There was the news which came in that $5 billion worth of funds related to FTX was recovered. So do you think that is the actually fundamental reason which is driving the market to this level? Because there was concern then, and now there is some clarity coming in that FTX funds are recovered and market is getting a sense of support or stability?
See, Manoj, on the first stance, what we need to understand as a market observer is that the product is different and the technology is different, right? The product is, example, a cryptocurrency which is getting exchanged on a currency exchange. And the product, main idea, on the blockchain. That's the market, all right? So these are two different aspects altogether. People mix it up like in old days when we used to say that, all right, I think, but in the market, it's cold climate, it's winters now, and I think potato is going to go cheap. Now, when they think this, they almost analyze that potato will become cheap in this climate, and when I will go out in the market, I will get it for cheap. So that was the fundamental part happening in the market. Technically, nobody knew it. Technically, only those people knew it who experienced those seasons, and they bought it at those seasons. In the charts, when we are looking at the charts in the cryptocurrency market or any market, when we look at the climate, now you can compare it. When we look at the climate, we know that the market is very afraid. Now, FTX example is an example which happened in accident or by willingly. I cannot comment on that, how it happened. But whatever happened, of course, it affected quite a few of investors and people, but not completely. People who understand and who have advisors or who have consultants, they know when to invest and when to get out of it. So in the end, a blink or a budge of down or negativity you can see, but it cannot continue for a long time.
So Chandan, the world has taken a big leap into CBDCs, and very quickly that many countries have either launched pilot projects or are preparing a ground for the same. In such an instance, what do you think is the scenario that actually regulated currencies will offer stiff competition to cryptocurrencies? Very quickly, what's your view?
See, regulated currencies, according to me, cannot give that much of competition to cryptocurrencies because the used cases of cryptocurrencies is actually to become a vanished banking system between people. Now, why are people even interested in trading a currency which is a digital currency? They want to do it because so that the main use case, as you have said, the banking can be cut it out. So I don't think so that it's gonna happen anytime soon that people the main currencies can the physical currencies or the other currencies can disturb the cryptocurrencies in any means or by any way. But yes, we have to keep in mind that there are regulations and there will be new regulations coming up in every part of the world, and these regulations will make it easy and hard for different regions. So we have to think accordingly. You have to, as an investor or as a cryptocurrency enthusiast or even as an institutional, you have to be in a place where the laws and the legal laws for the currencies are adequate accordingly.
Favorable. All right. So are you hinting towards El Salvador, that we should all shift to El Salvador and maybe trade there?
Well, I would not say you should shift to El Salvador, but I think UAE is good. I'm here.
All right, fantastic.
Because of some reasons, but yes.
Al Habibi, definitely will move on to the next question. Is my very quick take, Varun, on CBDCs, if you have any reactions on that.
Absolutely. I think Chandan very rightly mentioned, right? The use cases, right? The CBDC actually solves a different problem. And while it comes from the background of centralized control, right? The way I look at it, there will be an early coexistence of, cryptocurrencies, stablecoins, and CBDCs, because again, we are still at a very early stage, right? If you look at the landscape of, CBDC pilot, almost, 80% of the country, are trying pilot, right? There are different use cases on wholesale, retail. While India, suddenly took a leap of this thing, right? Leapfrog into retail use cases. But it is actually, we will see in next few years as, both stable coins and, CBDC becomes widely usable, because end of the day, the success of any, things matters when there is mass adoption, right? So that's the take.
So Varun, you mentioned about stable coins. Samrat, my next question to you is, in your opening remark, you mentioned about stable coins are now one of the largest sector in the crypto ecosystem with an outsized role in storing and transferring wealth. which is widely been used. I'm talking about CBDCs and its way forward.
Okay, so if I were to address CBDCs, Manoj, one thing which I'm certain about is if a government puts its weight behind something, then the initiative is adopted by the citizens. I think in India, only one thing can give competition to CBDC, which is UPI, and if they both join hands and come together and are driven by the same ruling body, then I think nobody is going to stop the success of CBDCs in India. And I was really enthused to see those stickers which came up, those QR stickers which came up in Bangalore. And fortunately, that happened sometime around East India when that event was happening. So one thing very important is the regulatory challenges which CBDCs are solving. I think it's taking away a lot of governance or investigation, etc., out of it. I mean, as a concept. So I had also published an article in Economic Times about a year ago, and these were the things that I was highlighting. But the most important thing, which remains to be seen, is how it will reach the retail investors, retail people. I would not even call it investors. I would just say people who've just picked up their smartphones and started to use QR codes as a way of paying. Because, you and I, all of us in this call are, top maybe 1% of the 1% technology adoption. We've seen these things evolve in front of us. We've built some things from our own end. So yeah, I think that is where I am. And I see a lot of potential, definitely. But the way it is implemented for everybody.
And we enter into our rapid fire question. We'll begin with Chandan. So the rules of the games are pretty simple. I will ask you a question. Very quickly, you have to answer in maybe a word or yes or no or in one line. So my first question to Chandan, I'm firing it to is, like Ethereum merge, we had an event which was not closed in 2022. I'm talking about the pending disbursement of Bitcoin and other funds from the Mt. Gox rehabilitation plan. Will it hit the 2023 and it will impact the market?
No.
Varun, what's your take on that?
Absolutely no.
Samrat, your take on that?
Yeah, agree. No.
No. All right. My next question to Chandan is, will stablecoin have a higher portion of crypto market cap parked in supportive technical factors for the digital asset class? What's your opinion, Chandan?
Absolutely yes. Of course.
Varun, what's your view on that?
Yes, for time being, yes.
And Samrat, what's your view?
Yeah, this is the year of stablecoins, yes.
So you see that more funds are getting parked in stablecoin?
Yes.
All right, one last question. Chandan, will the crypto market cap hit $3 trillion in 2023?
Not at all.
And why do you think so?
Because of the technical aspects showing that there is more pressure on institutions. As I told you, they're very cautious and they have plenty of time. I mean, they are not eager like retail traders to make a Lambo in short-term period. They have their patience and it's going to take its own sweet time to reach and become a little asset holding volume again. So because of that, it will take a little time. I think at the end of 2023 or the starting of 2024, we would have a very relaxed period in the market. And that's where everything good should happen.
Varun, what's your view on that? 3 trillion in 2023?
Yeah, 2023 will be a very, the way I look at it, will be a silent period. You'll see a lot of development happening, but reaching that market cap would be really challenging because again, there are a lot of factors at play. One thing at a time, regulation will play its, crucial role. But again, if you want a short-term success for a long-term pain, that's what, market is suggesting it, but it will take time. It will take time to reach that cap.
So Samrat, your quick take on that. He mentioned about silent period. It reminds me attending a press conference of a corporate regulated by securities and regulated by SEBI. So what's your quick take on that?
So two things. One, when Chandan says technical factors, he's talking about the technical charts. Okay, he's a trader, not blockchain technology. But I think 3 trillion can happen only when Satoshi shows up. Let's just leave it like that.
All right, that's all there is in this special segment on Digitally Unplugged. Stay tuned on 3.0 TV for more such interesting views and updates and interviews. Thank you.